Welcome to the Sports Umbrella, where we cover all aspects of sports. Soak in all the knowledge from our guests who range from pro athletes playing up a storm to industry experts making it rain. My name's Kelly Okun, and I'm a former pro golfer and founder and CEO of Fairway to Green, an equitable sports media company. Joining us this episode, presented by GalwayPlus, is Isaiah Kacyvenski, a former NFL player and double Harvard grad. Isaiah shares how sports and education laid the foundation for where he is today and how he worked his way up in the venture capital space. Isaiah, thank you so much for joining us today. Would you mind giving some background of how you ended up where you are today? I know it's an interesting story.
Yeah, thanks for having me on. It was awesome to meet you. And yeah, I grew up in upstate New York. I grew up in poverty, was homeless for parts of my childhood, and realized early on sports and academics were my way out, and committed to that. I just knew I didn't want to live in poverty, and that's really never left me. I think people that have grown up in poverty never see that burden lifted in a lot of ways, but really made up my mind at a young age, and really made up my mind like one pivotal moment when I was 14 years old, and I realized that I wanted to control my own destiny, and the best way to do that was to work as hard as I possibly could every single day. And not only in sports, but academics as well. And I went from kind of an average student to a top-notch student just by working harder and caring more, right? And really that carried over to every single aspect of my life. And from when I was 14, that was like a life-changing moment. It was like one day, one night, I couldn't get to bed, and it really changed how I looked at the world. I created a sign that said, "Let no one outwork you today," and put it above my bed, and just really try to live by that. And I'll fast forward. I ended up going to Harvard as an undergrad. I'd say probably the last place in the world I ever thought I would have found myself. Just thought I'd been a complete misfit, not fit at all. And it really ended up changing how I looked at the world. Just taught me to feed this level of curiosity, question things that have stood for a long time. And I knew I wanted to play in the NFL. I figured if I worked hard enough, they were going to find me. My backup plan was to be a doctor. I was a pre-med undergrad at Harvard, held down 4 jobs, lived the life of a hermit there for 4 years.
Wow.
And, fast forward again, I ended up being drafted by the Seattle Seahawks in the 2000 draft, played for 8 years. Never a superstar, just grinded out 8 years, barely surviving. I was a linebacker. And, won the middle linebacker job my 3rd year in the NFL, but really stuck around for 8 years because I was willing to do the dirty work on special teams. I was a 3-time captain in Seattle. I was one of the captains of our first Super Bowl team. It was just an amazing experience when we were there. I married my high school sweetheart. Both of our kids were born there, and they're playing college sports now. And the first time I was handed a signing bonus when I was drafted in 2000, I realized I knew nothing about finance, economics, public markets, private markets. And my dad was a janitor, made $8,000 a year my senior year of high school. I was the youngest of 5 kids, so you can do the math on the poverty line. But it was very much that rich dad, poor dad situation. And for the first time in my life, I had free time in the off season. So I decided I wanted to learn everything I could from the ground up. So I read every book I could, talked to as many people as I could, and did that for 3 years, put together a homegrown base of knowledge, and started angel investing 22 years ago in 2003. And when I was still a player, embedding into those companies in the off season, learning like a fly on the wall from entrepreneurs, how to take a concept and commercialize it, how to build a team, execute against a strategy. It was just an awesome, lightweight way for me to learn. Did that every single offseason until I retired in 2008, decided I didn't want to be a doctor. I wanted to get into venture capital, and figured I needed a formal base of knowledge to do that. So went to Harvard Business School, to get my MBA. After talking to tons of players, men and women that had transitioned out of a professional career and what they wanted to do next, and it really felt that business school was the best way to kind of get that base underneath me, show people I was still hungry as well to do that. It was a challenge, right? Dusting off the books again and be able to go through that. I know you know that all too well. And it was an awesome experience, though. It was great. And again, I knew I wanted to get into venture capital. I had a great mentor for me for a long time. Rick Frisbee is one of the founders of Battery Ventures. And he gave me a great piece of advice when I was in business school. He said, listen, typical path to venture capital is start as an associate at a fund, work your way up, and go start your own fund. He said, don't do that. Be an entrepreneur first. Know what it's like to be in those shoes. Have an authentic understanding how difficult it is when you get on the other side. And awesome piece of advice. And I ended up joining a company there, straight out of business school. It's called MC10. It was an amazing experience where I met my eventual co-founder, Will Ventures there. It was 14 years ago, 2011. We've been working together ever since. That company raised over $100 million, was later acquired by Dassault Systems, a large French conglomerate. And then we had continued to work on angel deals together, Brian Riley and myself. And Brian's background's very similar. He was a first-generation college student. His family had immigrated from Peru. Was a Harvard linebacker, several years behind me, but him and I were kindred spirits. And that started our journey together, effectively twice as entrepreneurs. We left, we were fully vested, and had this idea around Will Ventures, which is how does sports open up massive adjacent markets? An area that's always been narrowly defined. How do we actually show that you can touch massive adjacencies, and really taking a methodical approach to the space? No, it was that kind of too narrowly defined. You can touch big adjacencies across the board, but him and I, fully vested, started our next company, which was called the Sports Innovation Lab, which is like a McKinsey meets PitchBook type of model. Large corporate acquires our clients, so helping define M&A roadmaps and build by partner decisions. A lot of different ways to help us to take a research-backed, thesis-driven approach to this perceived niche market. And that's what we did. We got that up and running, multi-million-dollar run rate, and then handed off the reins and said, all right, we're ready. That was a stepping stone for us, and went and raised our first fund in 2019. So I know I'm a little long-winded, but
that was a great story.
And we're now just at our first close for our third fund, and more than happy to talk about that as well.
Yeah, I would love to. And at first, I just want to go back to, you said you had a co-founder. I know people are, especially at school, they're always encouraging you to find a co-founder. Have you found that's really made the difference in your pursuits?
Absolutely. Brian and I, again, now it's, we've been working together for 14 years, going on 15. And having the journey from being there's a kind of a very similar journey, right? Being an athlete, sometimes it's very lonely, right? If you want to be the top at what you want to do, there's a ton of time you have to put in. Even when you're in a team sport, a ton of time you have to put in individually, right? To do that, that's a very kind of lonely journey at times. Being able to do that with someone that is just an amazing complement, sees the world the same way, is willing to work extremely hard as well, culturally, kind of values-wise, as well as just, willing to figure it out. If we don't know the answer, be able to kind of figure that out. And I've definitely gotten that with Brian, and how we complement each other as well, right? And how we look at the world, and really try to have honest discussion. And we've really, we're a team of 10 people now. We're offices in Boston, New York, San Francisco, and LA, and really try to encourage a very intellectual discussion where the best idea wins, right, across the entire organization. That's really important. And it really starts with us as two founders, feeling that how can we make the organization entirely flat, give everyone a voice for the best ideas.
I love that. And whether you're doing this with your new fund, but how are you bringing your experience as an athlete, as well as your upbringing and your co-founder's upbringing, into your investment philosophy?
That's a great question. I think if you go back, the name of our fund is Will Ventures, right? And that is something that's personal to both Brian and myself, our own personal journeys, but it's really an ode to the entrepreneur's journey, right? In the face of immense odds, finding a way, the power of human will. And that is something, again, personal to him, personal to me, but really that's something I think a lot of people can relate to, especially entrepreneurs, because it's so hard to build a business. And sometimes you think you're on top of the world, and sometimes you think the world's caving in, right? And to have that kind of steady approach, getting up every single day, really trying to find a way, right? Push that, kind of vision forward, put the next foot in front of the other across the board. And we really try to look at that trait in entrepreneurs, right? Just, willing to do whatever it takes to get the job done. Obviously in the right way, but just this idea of stick-to-itiveness and not taking no for an answer and figuring out a way, right? And just being resourceful, all those things really important for us. We want to back, entrepreneurs that are experts in their space. They know it inside and out. They're subject matter experts. They know the competitive landscape, everything else. And we try to take that same approach as investors too, right? Where we want to know spaces very well that we invest in, not just, kind of take a flyer on something, but taking a very methodical approach, mapping markets. And we run over a dozen research campaigns internally a year. And we always want to, try to skate to where the puck's going to be and have a really strong point of view. We actually have a saying internally, do we know the market so well we can finish the entrepreneur sentences, right? And if we can't, it's probably not a market we should be playing in or have the right to win for that. So we always are trying to be prepared. And a lot of that comes from an athlete's mentality. You always have to be prepared, put the hay in the barn around that. So those aspects, the strength of the entrepreneur and knowing the markets extremely well, having deep conviction. You're not going to be right all the time, but do you have a point of view that you feel this is where the market's going and shifting?
It's really interesting because it comes on both sides, right? Both people get to decide if they want to accept the investment or if you're going to propose it.
Absolutely.
And are there any specific criteria you're looking for in a business? I know some people before have mentioned EBITDA or like if they're at a certain stage. Are there any other certain criteria you
Absolutely.
have to hit?
Yeah. And I'll give a kind of overview of fund and how that helps us focus in on an opportunity. So, our first fund we raised was a $55 million fund in 2019. Second fund that we raised and announced is in 2022. It's a $150 million fund. Just had our first close on a $200 million fund for our third fund now. And our focus, particularly early, anywhere from pre-seed to Series A is our strike zone. Check sizes ranging from, 1 to 10 million on entry point, and really having a methodical strategy around, we're not a spray and pray investor. It's not we're making hundreds of investments per fund. We're doing about 20 to 23 investments per fund, give or take around that. So in typically targeting ownership, entry point, 10 to 20% on ownership and saving about half the fund for follow-on capital, right? So being able to a true feed the winners approach, moderate portfolio theory around that. But so really looking at a lot of different companies at the early stage in different markets. For us, you have to be able to answer the question on the market and the total addressable market and size of the prize. Is it going to be venture scale, right? Is this the right entrepreneur to back, which I know I covered, but is this opportunity the right opportunity to attack? And is it large enough, or is it perceived niche, but potentially even larger as it's unlocked? There's a lot of different ideas around businesses over time that have shown that the opportunity is a lot larger than where they initially start out. So being able to have that venture scale, be able to underwrite to venture returns. Typically, each of the investments we make, we have to be able to do the math around, can this return the fund, each into an individual investment if we had to. And you have to put a portfolio together that really kind of aggregates over time, where you have different buckets around that. But that is, and typically we can have a range from pre-revenue to early traction. We can make some exceptions for a lot of revenue, maybe even a cash flow positive as well. But it really depends around from that pre-seed all the way to A, maybe some exceptions on B as well, into a lot of different types of markets. Again, where we have conviction. Again, we're sports, media, entertainment, consumer broadly, but we could touch real money gaming, sports betting, youth sports, participatory sports, rec sports, opportunities, influencer-led brands, athletes as creators as well. There's a lot of different markets, health and wellness, longevity, a lot of different adjacencies. We always like to say what seems inflexible actually provides us a lot of flexibility to touch a lot of different markets and differentiate too, right? As investors, not being necessarily generalists, but having a really strong point of view in a bunch of different markets that helps us differentiate to the entrepreneurs as well, right? And we always like to say at entry point, we've been entrepreneurs before. We're going to roll up our sleeves and work extremely hard. And we want to do that alongside the entrepreneurs, right? Because far too often you have a venture capitalist that will say, hey, we'll give you money, we'll add value later on, don't worry about it. But we try to answer that question up front, which is really important, right? And before you even put $1 in, this is how we view your business. This is where we think we can add value to agree. And then we're going to roll up our sleeves and go do that.
That's really admirable, honestly, because I know a lot of people, when they invest, they take a board seat, which I'm saying you might still take a board seat.
Yeah.
But sometimes it's unsolicited advice that will stress out the founder, or maybe it depends how hands-on you are and how, it sounds like it's a discussion with the founder potentially on how hands-on you want to be.
Yeah, we typically do take board seats or board observer seats on majority of the investments we make. Typically we're going to be the lead, right? Typically lead, co-lead, not every single deal. When you're doing that, you're typically taking a board seat. But I think our perspective, having been founders and having been entrepreneurs, that we understand how difficult it is. And I think one of the things that we talk about early with entrepreneurs is we know it's never a straight path from like A to B. There's a lot of different twists and turns along the way, and just having this level of transparency on both sides is really important. That really helps the level of communication around being able to help good, the bad, the ugly. And we know our job also is not to go in and like run a business. It's how can we, and we've been on the other side, right? And we never want to be dead weight on the cap table. That's like the other thing, because we've seen that. We're like, we never want to be that, but we know our role is like, how do we help drive a level of efficiency in an entrepreneur in a founding team's day? How do we connect dots quicker, whether it be from strategy, from hiring, from business development to downstream capital, which is always front of mind for an entrepreneur. It's just the lifeblood of the business around that. All those really, really important, and being methodical around there.
GalwayPlus is the proud sponsor of the Sports Umbrella. GalwayPlus Sports and Entertainment is the first of its kind platform in the wealth and risk management sectors designed to cater to the diverse needs of affluent individuals, teams, leagues, and organizations operating within the sports and entertainment industries. Learn more at GalwayPlus.com. And when you're looking at who to invest in next, are there any trends that you're seeing in the sports, media, and entertainment space that you're like, we want to get ahead of? This is a good place to put our funds?
Yeah, absolutely. We've got a strong perspective on a variety of different areas. As you think about kind of your traditional sports, intellectual property, everything else, which is like 20 to 30% of what we do. The rest is like tech-enabled businesses. On the traditional sports kind of IP, think about like net new emerging leagues, right? Ones that are really kind of starting from the ground up. As you look at kind of this shift, like there's major tailwinds, right? Is the shift from linear cable to OTT and streaming. What a lot of people thought was going to break sports has actually made it more valuable, right? Sports, live sporting events, the last thing in our lives, refuse to time shift, and that creates a very valuable asset, right? And you don't watch Monday Night Football on Tuesday, right? And that as the ultimate engagement tool will continue to see the rise in the importance around engagement over the next several decades, right? And continue to be able to do that. So we think there's a ton of opportunity around that. And finding the right net new leagues, there's a lot of things popping up, and we have deep characteristics that we look for. Particularly, kind of 4 characteristics around that. We don't have to like walk through them, but like for us to understand how you get through this like valley of death over the first couple of years to survive, on that front is important. And we've got great examples of that. The TGL, Tiger Woods and Rory McIlroy's TGL League, the Snow League, which is Shaun White's Global Action Sports holding company. That first property is the Snow League as well. And then if you look at like tech-enabled businesses across the board, different areas that we look at in emerging markets, to your point, the growth of women's sports, the professionalization of college sports, the globalization of sports broadly. You're starting to see that where you see deeper monetization, right? I think I saw an example, I think of Boston Red Sox fans globally, where less than 1% of those fans, very much less than 1% of those fans will ever step foot in Fenway Park, but you have a massive, very passionate global fan base, a lot of different ways to kind of monetize that as well. So there's a lot of different opportunity there. And I mentioned before, we've done kind of youth sports plays. We think there's a huge opportunity there. We've got a company called Youth Incorporated, and it's a content to commerce flywheel. Think about it as like a Fanatics for youth sports gear across the board. And former executive at Fanatics, Ryan Bass, one of the founders of that. So he's got a deep understanding and knowledge, teamed up with Greg Olson, the former NFL player, Fox News analyst, and he's got to have really built an impressive flywheel that they're continuing to build up. So I think there's an awesome opportunity there across the board. Again, health, wellness, longevity, human performance, all amazing aspects as well. I would say, kind of influencer-led brands, as you think about how people consume is shifting, and the personalization around that, having highly efficient customer acquisition as a core to any business. You can do that, right, with influencers, whether that kind of, if you define influencers as athletes as creators, or just influencers kind of across the board that touch adjacencies. We think there's a huge opportunity there. And as you think about kind of a full kind of well-known creator as well, the ability to monetize across several different channels, whether it be CPG and software, I think there's a lot of different huge opportunity there. We're exploring a bunch of different things there. So sorry, that was like long-winded, but those are some of the areas.
That's a lot to look out for.
Yeah.
Keeps you busy, I'm sure.
Absolutely.
You said about 70% of your portfolio is in the tech space. Did I hear that correctly? What sort of tech are you looking into? Is it still health and wellness adjacent, or is it more diversified?
Yeah, so out of all those examples, like Youth Incorporated as a tech-enabled service, or kind of around that. If you think about, we backed Nigel Eckel, is one of the founders of FanDuel, his new company called BetHog, tech-enabled business as well. We backed a company called Players Health that's focused on youth sports, insurtech play, where you look at general liability and kind of claims that very mom and pop leagues across the country, highly fragmented. What they've done is digitize that entire experience, right? What had always been kind of pen, paper, fax in, digitize that entire experience. They're now pushing into NIL collective insurance in college sports and looking at professional sports as well. So all a tech-enabled business as well. For that amazing company, Betty, we backed, that is the social online betting platform based out of Canada, but should do over $200 million revenue run rate ending this year as well. So like deep traction. Company enterprise play that is tech-enabled business as well called Infinite Athlete. We backed pre-revenue. We're in that with General Catalyst and Teresa Horowitz, Silver Lake as well. That really automates sports data collection. So computer vision overlays on top of broadcast feeds, where that data itself is highly valuable for media consumption, for betting lines, for whatever it may be across the board. So those are some other really good examples of some business that are tech-enabled.
What advice would you give aspiring athletes who want to either follow in your footsteps or want to get into the investing game or the VC side? What would you tell them on how to get there or how to be when you get there? Because it's clear you're very person-centric, which is much needed in this space.
No, I appreciate that. And I think the best advice is to be curious, right? And I think a lot of the times, I talk to athletes all the time that are kind of retiring or current athletes, where, a lot of the time, the initial reaction is like, all right, have a signing bonus, have a big contract, gonna hand that off to wealth manager and just not learn. Not that's bad, because that's good, because you want to have a team around you, but just leave it to someone else to figure out, right? But I think really diving in and understanding how things work, again, in the public markets, the private markets, kind of asking a ton of questions, really important. And particularly with like current players, but this goes for even former players as well. You have a platform, people want to talk to you, they're open their doors, and people have decades of experience. Like for myself, like in venture capital, I was like I wanted to like learn from them, right? And you're able to get that time with them and like just listen, have them share their wisdom as well. And then for me, I also kind of read books as well, but like I think all of that speaks to like a level of curiosity of like, I want to learn this, it's important. This the sport I play is a short window in my entire life, right? If you like look back, you can't play forever, right? And that's a really important piece as well, to understand and like set yourself up for success of this is going to end someday. You're going to work extremely hard when you have that opportunity, but like at some point it's going to end, and really preparing for that, to have a knowledge base around that, and to also figure out in that journey too, you get to figure out what you're also passionate about besides kind of the sport you play. So that's the advice I give a lot to athletes, current athletes or ones that are looking to retire as well. I've just continuing to learn, and always try to be a resource, pay it forward as well, because there's a lot of people that helped me too along the way.
Thank you. I know there's just so many brand identity crises when you're done with this sport.
Absolutely. it's just completely different. If you're not prepared, it feels like a shock. They were talking even on the panels today on that transition, and it's you go from really being at the pinnacle of the sport to, if you don't prepare, getting tossed into something else. And if people expect you to be at that same level, so I retired, I think it was like 31 or 32, and I didn't necessarily have the entire knowledge base of a 31 or 32, but so there's like a learning period as well. And I think a lot of that in that transition, being like easy on yourself too, on like, you're gonna learn, you're gonna work hard, you're gonna bank all the stuff that get you to the pinnacle of where you got in your sport, you're now going to be able to point that in another direction. And the people around you need, like, be patient. I'm going to get there. And be patient with yourself, too. And that was, like, one of the biggest pieces. I had to tell myself, but, like, again, tell a lot of men and women, too, that are retiring, the same thing.
Yeah, you have to reframe some things in your mind, but you
Absolutely.
have the skill set for it from being an athlete. One last question. You have a son and a daughter both playing sports in college. What do you wish the sports world will look like when they graduate?
That's an awesome question. I know it's changing and it's a little different, but I think, finding common ground across the board for athletes that are getting the benefit of an education and really kind of having that blueprint of, like, academics and education, true student athlete experience is important. But I think being able to have the resources, the required amount of resources to be able to do that, and depending on what type of background you had as well, not have to worry about, like myself, like working 4 jobs, everything else. I think that will create, and not necessarily like maybe crazy NIL dollars kind of poured in now, but like maybe somewhere in between. And it's moving towards that. I think the traditionalist in me would say, that's, kind of makes it tougher on the game, but, like, it's a complex landscape and it's coming. It's, how do you prepare for that? But I think finding the right balance over the next 3, 4, or 5 years around that, where I think there will be balance, right? And there'll be some settling around that. But I think there's also kind of an evening out, I feel, is due for men's and women's sports too, kind of across the board. And that compensation kind of piece also kind of will play a role in college sports, not just professional sports as well.
Thank you for sharing. Isaiah, thank you so much for joining us. Really enjoyed the conversation, and I hope you enjoy the rest of the conference.
Thanks for having me, Kelly. It's been awesome.